Of New York's tech scene. Through his blog, abc.com, he recently discussed network effects in the enterprise, which drew many comments from the community. Tonight he's going to expand on this post and share thoughts with fellow entrepreneurs in the space. Right.
So one of the great things about the venture capital business is that every day, almost without fail, I see an incredibly good idea. And today the incredibly good idea that I saw was yours, which is making investors take a test before they can write a check. What an awesome idea. If every person who bought stock in an IPO had to actually take a test to prove that they'd read the prospectus, we'd be in a better place. If every venture capitalist, before they could write a check, had to prove that they actually were paying attention when you were pitching as opposed to typing on their BlackBerry, we'd be in a better place. So that is a great idea, and I hope we see more of that. I mean, I really love that. Make people take a test before they get to write a check. Awesome idea. Anyway, I didn't come up here to rant and rave about that, but I was inspired by that idea. I want to talk about networks in the enterprise, and hopefully some of you read a post that I wrote about that a few months ago. That's going to be sort of the stepping off point for this conversation. But before I do that, I want to talk a little bit about where I'm coming from. My partner Brad likes to say, you know where I stand by looking at where I sit. And where I sit is in a chair making investments in companies that we want to be very big companies. So a lot of where I stand on things, the issues that I'm going to talk about tonight, come from somebody who wants to invest in companies that can be worth hundreds of millions, if not billions of dollars. And so if you're trying to build a company that can be worth 5 million or 10 million or 20 million or 50 million or maybe even 100 million, and I say things that you don't agree with, that's fine. Because I'm not really thinking about investing at that scale. I'm thinking about trying to invest in things that are much, much bigger. And in return for taking those kinds of, for going after those kinds of opportunities, we're willing to take on a lot of risk. Risk that the idea will fail completely. About a third of the things that we invest in fail completely, meaning they're worth zero, zilch. About a third of the things we invest in will be successful in some way, shape, or form. They'll get sold. They'll turn into a profitable company, but they won't really turn into a lot of money. And then only about a third of the things we invest in actually achieve anywhere near that kind of goal. So that's where I sit. And so when think about the things I'm saying in that context. It doesn't mean that I'm right. It just means that that's my point of view, and that's what I've come to share with you tonight. So when I think about software, particularly software that's sold into corporations, enterprise software, SaaS, whatever you want to call it, I think about this story. And this is not a real story. This is just a story, a morality play or whatever. And the story goes like this. Entrepreneur comes up with the idea for a brand new category. Not to pick on somebody tonight, I'm going to build a system that will allow corporations to not only measure their energy consumption, but manage their energy consumption and save hundreds of millions of dollars in the process. Great idea. They go out, they build it. They're the first people to do it. It's an expensive process. They've got lots of engineers. They've got lots of salespeople. They go out, they build the market, they evangelize the market. They dominate the market, they sell their software for hundreds of thousands of dollars, and they're really successful when they go public. And then two kids funded by Paul Graham in a garage basically say, look at those guys, we can make software that's like that, and we can sell it on a self-serve basis, and we'll charge $100 a month. And then they go out, they do that, they get their product to the market, and then the big company who created the market in the first place and has this very expensive piece of software now has a low-end ankle-biter competitor that's creating a lot of pressure on their pricing and causing their sales cycles to lengthen, and the economics of their business get hurt. And then a bunch of people decide to create an open source project to open source the same thing, and all of a sudden the technology's free. Okay? That's been going on in the software business now for over a decade. And it is a reality for everybody that there is very little value in software per se, because it's commoditized. People can create software products that look just like yours, they can knock off your products, and they can maybe not out-innovate you, but they can impact your business model very significantly. And that is why we as a firm have not been that excited about investing in traditional enterprise software. And so when we think about the things that we want to invest in, when it applies to the enterprise, and frankly anything really, but we're here to talk about enterprise, so that's where I'm going to focus tonight, we want to look at network effects, where there is something other than the software that the enterprise is buying. And those network effects, in our mind, typically come in two places. Networks of people or networks of enterprises that come with the software, or data network effects that come by virtue of using the software. So that when somebody, an enterprise, buys your software, they're not just buying your software. They're not just buying the functionality. They're not just buying the workflow, but they're getting something else that they couldn't get anywhere else. And that the more customers you get using your software, the more these network effects grow. Either there's data network effects or user network effects, if you will. And I'll give you some examples of that. And we have found that those make the very best enterprise-focused businesses because they're not commoditized. It's very difficult for somebody to create an ankle-biter competitor to come in and do that to you if you basically got all the major players in the marketplace on your software. So I'll give you a couple examples, and then we can maybe open this up for some. I'll try to pull it all together at the end, and then maybe we can open up for questions. So there's a whole back row of hecklers back there wearing Work Market T-shirts. Okay, so there's a bunch of folks from one of our portfolio companies called Work Market here in the audience, and so Work Market makes a piece of enterprise software that that companies can use to manage their contingent workforces. They're freelancers, but every enterprise that deploys the Work Market platform not only starts to use the Work Market software, they also take all of their contingent labor relationships and put them into the platform. And those contingent labor relationships are not exclusive to them. They are part of the network, right? And so one of the definitions, maybe the definition of network effects, is any system where every new user of the system makes the system more valuable has network effects. So if you think about, in the case of Work Market, every new enterprise that joins the platform puts additional resources, freelance resources, into the system that then anybody who uses the system can hire. And that creates a network effect. So that if the ankle-biter competitor wants to come along and compete with Work Market, they can't just compete by ripping off the functionality of the software. They have to build up liquidity of freelance resources that is equivalent to or greater than that which Work Market has built up. It's not an impossibility, but it is harder to compete with that. And the more successful Work Market is, the harder it's going to be for somebody to do that. So that is an example of what I would call a user network effect. The more users you have, the more people are in the system, the more valuable it becomes. Another example of an enterprise-focused company that we've invested in is called Pollenware. And Pollenware is in the business of, well, they're trying to make it easier for companies to manage their working capital. So working capital, for all of you know this, but I'll say it just to make sure that everybody knows it. Working capital is essentially the difference between your accounts receivable and your accounts payable. So, if you have to pay your bills more quickly than your customers pay you, your working capital grows. And working capital is a real problem for all businesses, but particularly smaller businesses and higher growth businesses. And it gets very difficult for an entrepreneur to manage the fact that let's just make up an example. Somebody's making bicycles and selling them to Walmart. So they have to manufacture the bicycles. So let's say the bicycles are going to sell for $250 at Walmart, so it costs them $125 to make the bikes. They make 1,000 bikes for $125,000. They sell them to Walmart. Walmart doesn't pay them for 90 days. So that's 90 days that they are out the $125,000. And so this is a real big problem for small businesses. And a lot of you are small business owners, and you probably have these problems. So what Pollenware has done is they've created a marketplace that businesses join. And they started with very big businesses, like Walmart. Walmart is actually not a participant in Pollenware, but lots of companies like Walgreens and Target and people like that, big retailers, were their first participants in their system. And what these big enterprises do is they take their entire accounts payable ledger and they put it into Pollenware. And then Pollenware invites all of their suppliers, who are the vendors in their ledger, to come into the marketplace. And then they create auctions, real-time auctions, on a highly regular basis, where the suppliers essentially bid in a bidded auction marketplace against other suppliers for the excess cash that a big company like Walmart might use to prepay their accounts payable to accelerate that. And so what the small business owner is doing is saying, I know I'm going to get that $125,000 from Walmart, but it's going to take me 90 days. I'll take $120,000 if they'll give it to me today, or I'll take $115,000 if they'll give it to me today. And they bid against other small suppliers in this sort of auction-like model, and it's great. It's great for everybody because Walmart basically gets a better return. Again, Walmart's not a participant in the system. I'm just using them as an example. Gets a better return on their excess cash by doing this than they would if they bought treasuries or something else. And it's better for the supplier because then they can take that money and they can make more bicycles and grow their business more quickly. But the coolest thing of all, in my opinion, is the bicycle manufacturer has its own supply chain. And so the bicycle manufacturer can take its entire accounts payable ledger, put it into Pollenware, and invite all their suppliers in. And so you can just kind of imagine how all this capital cascades through the marketplace. And it becomes more and more valuable the more people join the system. And so yes, it's a software-based business focused on enterprises, and every enterprise that is either a supplier or a buyer in the system is using a piece of enterprise software to do this, and it's usually the people in the treasury function at the big buyer companies that do it. So it feels like enterprise software in some ways to them, but it's really a marketplace where network effects play out. So we like these kinds of businesses, and so when we think about investing in the enterprise, these are the kinds of things that we look for, and we have the confidence when we invest in these companies that if they are successful, and again that's a big if, right? So we're willing to take the leap of faith that they may not become hugely successful, but if they become hugely successful, they're going to have highly defensible businesses that are not easily commoditized by ankle biter competitors or worse, open source projects. And it's not that we're against open source, by the way. In fact, I would argue that open source businesses are also network-based businesses. So we have an investment in a company here in New York called Tengen, which makes MongoDB, which is one of the leading open source database products in the market. And what's interesting about the open source model is that developers can use the technology for free. And so lots of developers not only download a Mongo database for free and deploy it, but they start to build products and services on top of that. They also, in many cases, contribute back to the open source system, they build drivers or patches or whatever, and they'll contribute that back. And so that in and of itself, the developer network that builds up around an open source project is in itself a network effect in a number of dimensions. Because it's free, lots of developers pull it down, play with it, get familiar with it. So it's an easy way to build very quickly a network of developers who really know the technology, and that ultimately will lead to more and more adoption. But also, the technology gets better and better and better without the company, the sponsoring company, in this case Tengen, having to invest all of the energy in it. And frankly, end user developers sometimes make great contributions to these projects because they have something specific that they need. So they fix it and make it so it works for them, and then it turns out it works for lots of other people too. So open source can also be, in and of itself, a networked-based business model for the enterprise. So that's what we like to invest in. We have, sort of ties in well with what we do on our consumer investments, where we also like to invest in networks. And so that's sort of the dominant theme at Union Square Ventures across both consumer and enterprise. But if you look at, we have a timeline on our website. So if you go to usv.com/timeline, we basically have taken every investment that we've made since we got started in 2004 and laid it out on a timeline. And you can look at that by geography or stage or sector. And if you look at it by sector, you can see our history of making enterprise-oriented investments. And you'll see that the very first investment we made back in 2004 was enterprise-focused. And probably a third of the investments we've made over the history of our firm have been enterprise investments. I don't think a lot of people realize that. A lot of people probably think that we are consumer investors, but the reality is we're network investors. And whether that's networks in the enterprise or networked in the world of consumer services, that's really how we think about what we do. And one of the reasons I wanted to come here tonight was that I wanted to make sure there's a growing enterprise software community here in New York, and it's exciting to see that there are more and more enterprise-based businesses here in New York all the time, and I wanted to make sure that the enterprise software community knew that they are welcome at Union Square Ventures. We are happy to meet with you and hear your pitch, but before you come in, think about whether what you're doing has any network effects on the data side or the user side. And on the data side, I think one of the things I want to make sure people understand is that if your software is just pulling data from either your internal systems or publicly available data sets, that's not a data network. A data network is, I'll give you an example of one of our companies that has a data network. We have an investment in an enterprise-focused company here in New York called ReturnPath. And ReturnPath has basically built up a network of senders and receivers in the email ecosystem. So pretty much every email receiver, an email receiver would be a spam filtering company or Yahoo or Hotmail, essentially contributes data to ReturnPath. Almost every mail sender contributes data to ReturnPath. And they all do that because they all have they buy software from ReturnPath or services from ReturnPath, and part of the sale is that you participate in their data network if you use their technology. And so the more senders and receivers that become their customers, the more powerful their data network becomes, and they get a network effect from that. So they now essentially see almost every single piece of email sent to anybody in the world, and that allows them to build services like who are good senders, who are bad senders, what kinds of mail gets through to Gmail, what kind of mail does not, that kind of thing. And that turns out to be very valuable and pretty hard to compete with, because it's hard to build up that kind of network effect when there's already a dominant network provider in the market. So anyway, that's what we like to invest in. And if you have a business like that that is focused on the enterprise, then by all means, come see us. We'd love to learn about your business. And with that, I'm going to turn it open for questions. Nobody. In the back.
When it comes to data-focused network businesses, especially in the enterprise, do you think that there's a risk of kind of as more and more enterprises realize that their data is being used to kind of furnish the value of the company they're working with, of them basically seizing increased value and trying to be more restrictive of how data-driven network-based enterprises make use of that kind of data?
Well, I think the answer to that is yes. If you're being sort of sneaky about it, it's particularly a problem. I mean, in the case of, in the case of return path, that is the explicit trade, right? In some cases, they give their software away for free, and the trade is, we're going to give you these tools, and in return for you getting these tools for free, we're going to get data from you. So if it's explicit and people understand it, and they make that trade, then I don't think you have that much of a concern. And sometimes it's part of the sales process. There's a bunch of folks here who are on the work market sales team, and I know that a lot of times when they go in and talk to these enterprise customers and they say, all right, you're going to get the software, but in addition, you're going to take all of your freelance relationships and you're going to put them into the platform, the first reaction is, no fucking way. I'm not going to do that. And that's their sales challenge. They have to basically convince people, look, these are freelancers. They're working for your competitors already. It's not like we're asking you to share any information with your competitors they don't already know, but we're just making it possible in a system to do this in a more automated way. So that's a sales hurdle for them, but they go in and they acknowledge it up front. So it's not like a year from now someone's going to say, wait a second, all my resources are available to my competitor. They know that it's part of the deal for using the service. But if you're somehow putting some little data agent in your software and like harvesting data from your enterprise customers and not telling them about it, I think that's a bad strategy, and ultimately I think it's going to not end well for your business.
At the beginning of a company based on social networks, there's a chicken and egg problem, right? At the beginning, and there was a great example a few years back with local reviews,
right,
and Yelp, where if you're not a review, nobody comes. If nobody comes, people are looking trying to get reviews. And I was fascinated at the time because there was a company called Judy's Book that went under, and
right,
Yelp went to great success. Have you found the recipes and patterns to break that chicken and egg problem? Why was Yelp successful and Judy's Book wasn't?
So this is a question about how do you get the cold start to these networks? And are you talking mostly about consumer-based products? Or you're talking about everything?
All of them, yeah.
Well, so in the enterprise, I think oftentimes it's an enterprise sale, right? That you literally are going to go. You're going out. You have an expensive sales force, and you're going out, and you're basically convincing the enterprise to join your platform and contribute data. So in most cases, I think in enterprise-focused things, I think it's a sales force that gets you over that hurdle. In the consumer side, one of the tricks we've learned is if you can focus on single utility value, if you can build something that gives somebody value if there was no other user in the system, but it's inherently social anyway, then over time you can build up the network effect just on the basis of single-use data. And I'll give you an example. Delicious, which is a company we invested in almost, I guess, now 7, 8 years ago. A lot of the first users of Delicious just used it for bookmarking. They knew that their bookmarks were public unless they decided consciously to make them private. But most people weren't getting any value out of making the bookmarks public. They just started using the service as a way to have web-based bookmarking. And so just on the strength of that, they got about 100,000 people who were contributing data. And once they got to a certain scale, all of a sudden the social bookmarking data set became quite valuable to people, and then they started to get a network effect that way. But I don't know if they would ever have gotten a network effect if the tool hadn't been useful to a single user using it all by themselves. And we've seen that in a number of instances where companies have built systems that had both single user value and also social network value.
So if you're talking about industries which are more restricted, where they won't even have a conversation, if you talk about any sort of like sharing of data, how big does it have to be? Meaning, can it be interdepartmental, the network effect? Can it be, can you
No, I think it's got to be beyond the enterprise, because I think if it's not beyond the enterprise, someone can come in and knock you out. But I do think there's lots of problems. Healthcare is a classic example of that. Like, you talk about this kind of stuff in healthcare, and people are like, no, ever, never, But I even think in healthcare there are ways to come from the bottoms up and attack. If you can get to patients, right, and give patients a reason to maybe start to share data among themselves, or doctors to share data among themselves, or doctors to patients. I'll give you a really good example. Education. As you think about K through 12 education, and you think about creating a network-based enterprise model in K through 12, and you say, no, they're not going to like that, right? Like these school systems, these are kids, it's not going to fly. We have a portfolio company called Edmodo, and they basically have gone in and competed with companies like Blackboard and others who make sort of enterprise software for education systems. And what they did was that they took a very popular user interface, which was effectively Facebook, kind of cloned it, made it free, and offered it directly to teachers, and said, you can use this to basically distribute homework, reading assignments, practice tests, take-home tests, things like that, to your students. And you can, the way the system works essentially is at the beginning of the year, the teacher says, we're going to use Edmodo, log on to edmodo.com, type in this, password or whatever, and we'll now be connected. And then the teachers just use it to disseminate information. But what happened, of course, is that one teacher started using it in a school, and then another teacher started using it in a school, and all of a sudden the students had a single feed, news feed, whatever you want to call it, aggregated against all their classes, and started to create network effects among certain teachers and certain grades, and also in the schools. And lo and behold, superintendents of school districts started calling them up and saying, hey, we want to standardize on this. Like, teachers love it, the students love it. And so it came from the bottom up, wasn't sold top down. And they also used a free model, which is critical, because if you want to do that kind of thing, it's got to be free, at least, or freemium, so that someone can adopt it without having to go get budget for it. Because the minute someone's got to go ask for budget, they're going to get shut down.
So they were able to achieve something within one school first.
Right.
Because that's kind of similar to many departments within one enterprise.
Right, but you need a way to get beyond the enterprise. So in the case of Edmodo, what they did to do that was they said, oh, well, look, 8th grade math teachers, or let's say pre-calc teachers, right, are all teaching sort of the same thing. So they started to allow pre-calc teachers to start to create groups where they would start to share this, practice test was really good for my students, and they start to share it among the teachers.
Podcast network, Facebook is a dominant. Do you think the corollary to the network effects is going to be the dominant companies?
I don't know the answer to that. I think the enterprise is not as frictionless of a system. So I think that it's harder for something to just kind of run the table on a market sector. Because there are, even though we're talking about ways to bypass the traditional purchasing systems and all the decision-making processes that exist in the enterprise, they still exist. And I think that because of that, I think it's more likely that in the enterprise you're going to have more fragmented market with multiple large companies owning pieces of the market. Even with network effects, I think that's likely to be the case, at least for the foreseeable future. I mean, if enterprises just give up, right, and just say, okay, we're going to let all the decision making go all the way out to the edge, and we're going to let every employee decide what piece of technology they want to use, then that's what would happen. But it's going to be a long time before that happens. I mean, everybody here is in the enterprise business. I mean, how long is it going to take for that? Not going to happen anytime soon, so I think we're probably okay.
Hey, Fred. As people start to become more and more aware of privacy and the lack thereof, do you think that's going to have a big impact on the network effects and the collection of data?
Well, yeah, I mean, it's related to your question, which is, enterprises are not going to be as naive about data as consumers have been. And so I think in many of these sort of network-based businesses, there's going to be, you need to go to market with privacy policy and a very clear articulation about what data is going to be shared among all the participants in the system and what data is not. And if you can't do that in a very clear, crisp way, I think it's going to be very difficult for the enterprises to get comfortable with what you're doing. So, the way Facebook basically was able to, take all our data and, we didn't realize it until it was too late. I'm not sure that game could be played in the enterprise. People are smart. Enterprise people are smart.
So looking at New York, what do we need in order to get more entrepreneurs here starting enterprise-focused companies?
We have a lot, right? So I will answer your question, but I want to at least push back on it a little bit, because in verticals, we have had enterprise-focused companies here in New York for a long time. If you think about financial services, companies that service the banks and brokerages and hedge funds and that whole world, I think we probably have as vibrant an enterprise software community in New York focused on that vertical as anywhere in the world. And the same is true in some of the other sectors that are big here in New York, healthcare and pharma, which is healthcare of a different sort, and others. So I think in verticals, you definitely see that. But if you think about the big horizontal plays, the Oracles or SAP or that Salesforce.com, that kind of thing, clearly Silicon Valley has really been the place where most of those companies have been built. But not all those companies, but many of those companies have been built. And I think some of it is just, you can't beat it if you can't see it, right? So we have to have some of those successes here in New York, and so people can say, oh, I can build one of those companies too. So that's why I'm so proud of 10gen and Mongo, because I think they are well on their way to being the next MySQL, right? And so that's a big horizontal database company. And people say, well, we can build Mongo here, right? So we can build something else like that. So I think we need the successes, and we also need the domain expertise that comes from building a company like that. DoubleClick spawned dozens of ad tech companies. People worked at DoubleClick for 5 years, 6 years. Mike Wellrath, for example, who started Right Media, came out of DoubleClick. And so probably 10gen will spawn a bunch of people who have the expertise to build that kind of a company. So to me, a lot of it is just this stuff takes time, and it'll happen.
Yes, rather than the network, wouldn't you place an emphasis on a company that you're about to invest in for the enterprise support? Like in the instance of Linux operating system, companies spend millions of dollars on Red Hat when they could get Debian for free, but we buy Red Hat for the support. I don't really care about the Red Hat community. I don't need it. I need to know that I can call a guy who's knowledgeable in the product at 3 a.m. Wouldn't you look for that as a high-value indicator of a company you would invest in?
I think it is, the question is about support. I think to be a successful enterprise-focused company, you must do support well, right? But what I'm trying to say is that's not enough, right? I think if you're competing on the basis of support, somebody can come out and do support as well as you can. I don't think that is a non-replicable skill set. It's the same thing as functionality. Someone can copy your functionality, and they can copy your support group. The question is, what can they not copy? What is hard to replicate? So look, you can have a network-based business model, and if you can't support your customers, you will go out of business. So certainly it's necessary, but I'm not sure it's sufficient.
If you look at, it's related to a question we heard earlier, if you look at the players in the enterprise application space, the big ones, Salesforce.com, SAP, Oracle, it seems like Salesforce.com is the one that's trying to, and maybe succeeding in figuring out this whole network effect thing
Right.
with their users? Are you seeing that?
Yes, definitely.
Yeah.
I definitely think Salesforce is onto this, and they got to figure out what they can do and what they can't do, right? It's not going to be cool if they're taking my proprietary list of accounts and sharing them with you, right? So, there's the fundamental thing that they do is probably not a network play, but they are building lots of value-added services, buying lots of value-added services that very much are focused on these network effects. So I definitely think they're onto it.
So what can potential enterprise startups here learn from past companies that tried to build a network effect, like an Ariba, for instance? I mean, Ariba didn't do that bad, getting acquired by SAP potentially, but they're certainly like at 30% of where they were in 1999, and we're still having this conversation, even though that started in 1999, where the whole idea was this B2B marketplace where it was sort of collaborative and networking, right? So how do we take what didn't work then and apply it today with the changes in technology, the changes in sort of everybody being more open to social and integration and things like data.com, which is completely a network effect, and that's exactly what Salesforce does, is take your accounts and the people which go them for making money on that. Anyway, so my question is, what can we learn from what didn't work then?
Look, first of all, I think it's a great question. I do think that 10 years is a long time. I think that the systems have gotten lighter weight. I never really used Ariba, but it feels to me like it was a pretty clunky, heavyweight system. And I compare that to some of the tools that you all are demoing today and building today. They're truly web-based. They're very they're sort of hyper-networked by their architecture. So I think that's one fundamental difference. I also think that enterprises, the big buyers, are becoming more and more open to this. Things like the cloud, right? Like 10 years ago, when I was, our enterprise software companies could never convince a big customer to run their service in the cloud. They wanted, a behind the firewall instance of the service, right? There's no way I can't do that. Right now, pretty much everybody's doing that. So I just think that there's some changing dynamics that are going on in the enterprise market that make it more likely that these kinds of businesses will succeed today versus 10 years ago. That's just sort of, I think it's time has come when it can happen in a more meaningful way.
So you're talking about networks as being more of a protection from against newcomers as opposed to a user acquisition strategy or a customer acquisition strategy.
Right.
Do you think, is that just the way you've always thought of it, or you think in enterprise it's actually more just you're going to have to use sales? There is no such thing as viral adoption in the enterprise?
No, there is. There is. I probably should have spent 5 or 10 minutes on it. It's a great question. I mean, I definitely think the other big mega trend in enterprise is the adoption at the edge, right? And so people bring Dropbox in and it slowly spreads to the organization. People bring Yammer in and it slowly spreads to the organization. And now you've got billion-dollar enterprise software companies that really almost look like consumer companies. And they actually have, well, in the case of Dropbox, they have this whole consumer user base that they basically service for free because it's their acquisition channel. That's a big difference. And it sort of gets back to what I was saying about enterprises have changed. They really have, I think we've gotten to the point, and not all enterprises, but a lot of enterprises have given up trying to mandate that you must use a BlackBerry, you must use Excel, you must use a Windows desktop, you must use my 10-factor authentication to log into my system, right? Like, users are basically just blowing that off, right? And they're bringing in what they want to use to get their job done. And that's a grand sweeping statement that's not true everywhere, but I think directionally it's true. And so I think it does make it easier to use sort of what we would consider to be consumer web type user acquisition strategies. And I'm not sure that those are well, they have network dynamics to them. But I really am, from an investor perspective, more focused on the defensibility piece. Because if you can, well, one of the things we've seen in the consumer web is easy come, easy go, right? It's easy to use network effects to get big, but when network effects turn against you, they can turn against you hard. And so, you know, in the enterprise, I think what's interesting is, can you use network effects from a user acquisition point of view to start to build scale, and then through that scale, can you use other network effects to create defensibility that keep you there and make it very hard for people to come compete with you? And well, that works in the consumer web as well. Google is very difficult to compete with in search because of the scale of their user base and the data that they see every day. Facebook's difficult to compete with because of their scale and the data power that they have as a result of that. So it's both. But it's a great question.
Have you seen any examples of the, not just the like consumerization brings in a free product, but actually the so-called the edge, like the end employee can also buy something? Is there actually like any change in the way that budget works?
That is I don't have any like I don't know that we've got to that point yet. But you know, it's interesting in the case of Edmodo. I think it's the governor of Florida. Okay, this is I'm kind of winging it here, and I know we're on video, so I might have this completely wrong. But I think it's the governor of Florida that's trying to push school purchasing budgets all the way down to the teacher level, right? Like literally let the teachers decide, you know, what curriculum they're using, you know, textbooks, if they're buying textbooks, let the teachers decide that.
So like, you could buy your own iPhone or BlackBerry. Here's $400 for it. Do whatever you want.
I don't think it's like that free.
But in some enterprises.
Yeah, I mean we do that. By the way, Union Square Ventures does that. I mean we're not an enterprise; we're 10 people. But when we hire somebody, they can choose what kind of phone they want to use. They can choose what kind of laptop they want to use. If they want to use Excel, they can use Excel. If they want to use Google Spreadsheet, they can use Google Spreadsheet. And as long as they get the job done, we don't really care how they do it.
Do you have a sense, more in the consumer network part, you've talked about a couple of companies that have a freemium model. How do you see that going in terms of being sustainable long-term versus some that might have more subscription model? And again, some have done well with the freemium with advertising as their means of profitability. Some of this question is still outlying, even though they're fairly large enterprises.
Are you talking about consumer?
Consumer, but that could be, for example, Edmodo really is a functional, there's a business purpose for it, per se.
Right.
It's freemium versus a Twitter or a Tumblr that are pretty much, well, some of them are more business than personal, and most of them are mixed.
Right, so the question is really about subscription versus freemium versus ad-supported, and you know, which is more sustainable, so on and so forth. I actually don't think that that there's a discernible difference in the sustainability of one business from another on the basis of business model. I think you can sustain a business on advertising, you can sustain a business on subscription, you can sustain a business on freemium. What you need to be able to do to sustain a business is you need to keep your customers happy and create value for them and sustain that value for them. If you can do that, I think you need to tune the business model so that your incentives are aligned. And so in something like Twitter or Tumblr, I think advertising is the right monetization system because the users are creating the content. And I personally think that you will not get as much content into those systems if you charge the very people who are creating the value. It just doesn't make any sense. So that's about alignment of business model. That's why advertising is, in my opinion, the most sensible business model. In the case of something like Dropbox, I like the freemium model because you know, there are some people who use Dropbox lightly, and there are some people who use it heavily, and the people who use it heavily are happy to pay real money for it. So I think it's about alignment of interest between the business and its customers more than, you know, one versus the other. How much more time do I have? 5 minutes. Okay, great. In the front.
So you talked a little bit about Salesforce kind of doing it right, you know, but there's there's a gentleman from CA over there who was formerly with IBM, and they've all been on buying sprees. Dell's establishing an enterprise software business. What's your take in terms of, is it the big five got the vendor lock-in where 80–90% of IT budgets are kind of not going anywhere, or is there a real fertile startup landscape there?
Okay, so this is going to be a real controversial statement. With one caveat, which is a big fat caveat, if I could short the entire big fat old cynical rip-off artist enterprise software business, I would. Because they're going to have they can't innovate, they're not innovating, and all the innovation is happening by people in this room. The one caveat is it takes forever to rip out those systems. And CA is still in business. How the hell is CA still in business? So the half-life of a piece of enterprise software is much, much longer than any of us would ever want it to be. But they're all there for the taking. There's nothing that any of those big companies do that's really any good compared to the new stuff that's being built. That's my opinion.
Wow. I'd like to have your perspective. One of the trends over the 15, 20 years, I'll just give you an example out of like financial trading. Strong trade to go from human know-how, human interaction to much more machine-based type of decision-making. What is machine-based decision-making going to do to us, let's say, in the next 5 to 10 years?
Well, it almost bankrupted us back in 2008. No, machine-based decision-making kind of scares me. Even though you're right that we, more and more every day, enterprises are turning more and more of their decisions over to machines. But I think there's a lot of things that machines can't do as well as humans, and I'm hopeful that we're architecting these systems so that the machines are smart enough to realize when they are not prepared to make this decision, the incremental next decision, and pass it on to somebody like you or me to make the decision. So I'm not like an expert on this, but I think we're going to need both humans and machines to work together, and we can't just,
Why can't we all just get along?
Yeah, why can't we Yeah, well, it's funny because I was talking about one of our companies that was looking at their search numbers. So they have a search engine on their platform, and they're like, I have 2 billion searches a month or some huge number like that. And I said, well, a lot of them are probably machines, bots or whatever you want to call them, just programmatically running searches and then taking those search results and doing something with them. And we were talking about running search ads, where we're advertising to machines. Like, what are the machines doing with the search ads? It's kind of funny. It was good for a laugh. In the back.
I was just wondering if you, at Union Square Ventures, have an approach or a methodology to assessing the value of a network beyond some of the individual parts. Say, for example, Metcalfe's law or something like that.
Reed's law, Metcalfe's law. We've looked at a lot of these. I have to say, no. Like, I wish we did. And I'm sort of embarrassed to say we don't because it's such a fundamental part of our investment thesis. But we do not have any sort of analytical framework to think about the value of these networks. I have a gut instinct that real powerful networks in the enterprise in some ways are more valuable than enterprises in the consumer space. But I have that's just a gut instinct. I have no analytical framework. I couldn't get up and do a proof on the board and say, therefore, I would love to. I mean, if there was some, PhD in, math at, MIT who wanted to iterate with us on something like that, it would be fascinating to me, but we don't have anything like that. One more question. Russell, blend it with a work market. Yeah, it's like, you're going to give me a softball that I can hit out of the park.
When you look at networks, do you think it's more defensible to be deep in a particular vertical were to go broad and aggregate across verticals as big of a market as you can?
This is like the question before, like, gut instinct says deep in a vertical, because that feels really impenetrable, because you have sort of domain expertise and just a lot of stuff there. I mean, you know, look, I think MySQL, you know, put a big dent in Oracle, and I think that, you know, Mongo might put a big dent in MySQL. So you know, this is not in any way a negative on Tengen and Mongo, but I think that these horizontal platforms, networks, are vulnerable to some kind of, you know, fundamental technology shift. And I think in verticals, this is, again, this is instinctive, not based on any empirical evidence, but it feels to me like in verticals, it'd be harder to disrupt a really powerful network effect. So that's my instinct. Anyway, thank you, everybody.